How to trade options. Trading can be a lucrative way to engage with the stock market if you understand the basic concepts and strategies. This guide aims to provide option traders, whether new or experienced, with an overview of how to trade options effectively. Understanding options. Before you can trade options, it's important to understand what they are and how they work. Options are contracts that give the holder the right, but not the obligation, to buy, call option, or sell, put option, an underlying asset at a specified price, known as the strike price, before a certain date, called the expiration date. There are two types of options. Call options allow the holder to buy the asset at the strike price. Put options allow the holder to sell the asset at the strike price. Options have intrinsic and extrinsic value. The intrinsic value is the difference between the current price of the underlying and the strike price of the option, while the extrinsic value includes other factors such as volatility and time value. Steps to trade options. 1. Open an options trading account. To start trading options, you'll need an account with a broker that offers options trading. You may also need to request options trading privileges, as not all account holders will automatically have this authorization due to the risks involved. 2. Learn the language of options. Educate yourself on the terminology used in options trading, such as strike price, expiration date, premium, assignment, American versus European options. 3. Understand options pricing. Learn how options are priced and what influences their market price. The Black-Scholes model and the binomial model are among the most commonly used pricing models. 4. Choose your options strategy. There are numerous strategies for trading options, from basic to very complex. Some include buying calls, long call, buying puts, long put, covered call, protective put, straddles and strangles, spreads, iron condors, butterflies. Select a strategy aligned with your market outlook, trading goals, and risk tolerance. 5. Conduct market research. Stay informed about the markets and underlying assets you're considering for your options trades. Fundamental analysis and technical analysis can provide insights into market direction and potential entry points for your options trades. 6. Start with a practice account. If you're new to options or trying out a new strategy, use a practice or paper trading account to simulate trades without risking real money. 7. Place your options order. Once you're ready to trade with real capital, place your options order through your broker. Be sure to specify the type of option, call or put, the quantity of options contracts, the strike price, the expiration date, whether it is a buy or sell order, any additional order instructions, for example, limit, stop loss. 8. Monitor your position. Keep a close eye on your open options positions, as their value can change significantly with movements in the underlying asset's price, volatility, and time decay. 9. Close your position or exercise the option. Before the expiration, you can choose to close your position by selling the option if you own it or buying it back if you sold it. Alternatively, if it makes financial sense, you can exercise the option to buy or sell the underlying asset at the strike price. 10. Review and learn. After a trade is completed, review your decisions and outcomes to learn from your successes and mistakes. This will help refine your strategy and decision-making process for future trades. Conclusion. Options trading requires knowledge, skill, and discipline. Start by learning the basics and gradually work your way up to more complex strategies as you gain experience. Always be aware of the risks and never invest money that you cannot afford to lose. Happy trading!